There has been not a lot of retirement-focused discussion in the election, but Biden has put forward at least some concepts that are interesting with respect to 401ks. Of course, not a lot of detail in the policy proposal, but the idea has been floated of transitioning the current 401k tax deduction to a tax credit. That would be a really significant change to the US retirement system. It's been an idea that's been floated in the past, but never really pursued or implemented. Of course, as with any policy proposal, the devil's in the details here as far as the actual impact would depend on some of the numbers. So broadly, what transitioning the current deduction to a tax credit would do would be to transfer some of the value of the benefit or the cost to taxpayers, if you will, from higher wage workers to lower wage workers. Because of our current tax system and our marginal tax rates, the biggest value of the ability to deduct up to $19,500 from your income accrues to higher wage workers that are in higher tax brackets. Of course, anyone can defer $19,500, but the rate of taxes that you're saving on that deduction depends on your income tax bracket. In transitioning to a credit, instead of reducing income, the 401k contributions would be essentially reduced from your calculated taxes. So that means that more of the dollar value of the deduction is going to accrue to lower wage workers. A rationale floated for this change is the idea of fairness. Fairness means different things to different people. And we'd offer a couple of comments as we potentially get more details on this proposal. One would be the need to think about the 401k deduction in the context of the overall American retirement system. And truly, the 401k deduction should work in concert with Social Security. Those two programs together, private savings and public support, are providing retirement income. And the Social Security system is very regressive. It accrues relatively higher benefits to lower wage workers. So the way that the tax deduction is structured today effectively helps balance that. It allows for that greater deduction on a dollar basis for higher wage workers who are also accruing lower Social Security benefits. Another consideration that's really important is to think about things a little more granularly. It's easy in these descriptions to just say higher wage versus lower wage, but of course we have a whole spectrum of income levels, and the focus really should be especially on middle income workers and what is going to be the impact to those making, let's say, between $50,000 and $150,000 per year, especially families that may have a lot of other expenses. Losing that 401k deduction could be really damaging to retirement savings. So we'll be continuing to assess the proposal as it is continued to discuss if any additional details are released, and of course, if there's action to move forward and implement these changes to our system.
Is there any benefit from a tax perspective to the government? Will they generate more tax revenue from this? Can you comment on that?
Yeah, it's hard to say at this point. Of course, the devil's in the details, and it depends on exactly how the credit's calculated. Based on the commentary we've seen so far, it doesn't appear to be a revenue generating initiative. It simply seems to be intended to support retirement adequacy for lower income workers.
Right. And maybe this question is interesting to consider also. What, if any, impact would this have on corporate offerings, aka switching back to the old way of delivering benefits through a defined benefit plan? Could be enough to take there where you might be able to satisfy that higher income level deduction?
Potentially, it's hard to say. DB and DC plans of course are not mutually exclusive. So depending on employee feedback and pushback, we could potentially see DB benefits coming back. We may see companies choosing to deliver more 401k benefits through company contributions versus essentially relying on employees to save for retirement, if that tax deduction is going away for employees but remaining for employers. There's potentially more value to an individual employee in getting a profit sharing style contribution from their company versus having to contribute to get a match. So we'll really have to see exactly how that plays out, but any change to the tax system, I think it's a fair assumption, is going to have ripple effects on plan design, and we're going to see companies reacting to that.